Hello. I am so excited to be with you this week. Thanks for joining me. Today, I'm going to talk to you about 4 myths about LLCs. And I'm doing this because LLCs, somehow, the interaction between LLCs and your taxes, it is just one of the most frequent areas of confusion that I see in my business. So let's get you settled. But first, I just have a little bit of news in the Sunlight universe. I want to let you know that my book, Taxes for Humans, Simplify Your Taxes and Change the World When You're Self-Employed, my book is available for pre-order. This only happened this last week, so this is a brand new thing. This is the very first time that it's been orderable. You can actually reserve your copy. And I am so excited about it. So if you're interested in that, if you want to pre-order your copy of Taxes for Humans, you can get that on my website. And I also have some swag, some workshops that you can join if you buy multiple copies. I've got a whole bunch of other sort of like bonus stuff, and all that information is at my website as well. So if you're interested, you can get the book and get all those deals as well at sunlighttax.com/book. And I am so excited and so grateful for your pre-order. Why? If you don't know, and of course, why would you if you're not an author? Pre-orders are massively important to the success of a book. So your pre-order tells the publisher that it's going to be a hit, and they start to put marketing dollars behind it. It influences the bestseller list. It counts toward first week sales, which can help towards bestseller lists. It also, when you pre-order the book through your local independent bookseller, which I hope you do, it tells that bookstore that they should stock the book. A lot of bookstores only need 1 to 3 pre-orders for one book in order to see that there's demand and to stock it. So what that does, if you go to, I don't know, what's one of my favorite bookstores? Trident Booksellers in downtown Boston. If you order the book from there, what happens? Well, it will help them realize that they should stock the book. And then when somebody wanders into Trident in the middle of next tax season looking for some tax help, my book will be there and it will be there to help them. So I'm so, so grateful for all of your pre-orders. I cannot tell you how much it means to me, how much it is helpful to me. And also, you can definitely be part of my crew and my early pre-order bonuses if you want to pre-order now. I'm so grateful to you. And tell all your friends. So sunlighttax.com/book. I have a list of independent bookstores with the pre-order link if you want to make it as easy as I can for you. Although, of course, you know better than I do. If you're not, if it's not a bookstore in Asheville, North Carolina or Boston, Mass, then you probably know the stores better than I do. So just ordering from your local store is probably the very best thing to do. All right, there'll be more about the book in future episodes, I promise. And so I'll leave it there for now. And let's jump into LLC myths. All right, so 4 myths about LLCs. One, and this is really the biggie, that LLCs change your taxes. All right. This is the number one most frequent question that I get in my business, in my consulting calls. And so I really want to make sure that you understand that forming an LLC, when you are a self-employed person, when you are one owner of your business, forming an LLC does not change your taxes. Okay. I know it's confusing. And often I think lawyers don't know this. It changes your legal setup. Sure. It's a legal entity, right? But it's actually not a tax entity. And that is so weird and so confusing. And a lot of people don't realize it. If you form an LLC and you're the only owner of your business, there is no change to the way that you do your taxes. There's no tax savings and there's no change in structure or format of how you do your taxes. That's the important thing to know. In case you want to know what the IRS considers you when you form a single member LLC, the IRS calls you a disregarded entity. Any guess about why they call it disregarded? Because they disregard it. It has no bearing on your taxes whatsoever. So that's the truth. That IRS phrase, I hope, tips you off to the fact that this is definitely true. So that's really important information. I also want to make clear that An LLC, and a lot of people don't know this, and this includes some accountants, this includes a lot of lawyers, but a lot of people don't know that an LLC is a maximally flexible legal entity. An LLC is a legal protection that can lie on top of any tax structure you decide you want to have. So an LLC doesn't close off any tax options for you. You have every option still available to you, okay? And the order of operations is up to you. You can form a tax entity and then become an LLC on top. You can have an LLC and then elect a tax status that's different. So you can these are independent decisions, all right? I teach a lot about this in my program, Money Bootcamp, but it's just a really confusing area. So I want to clarify for you. Now, if you're more than one owner of an LLC, like there's 2 owners, 2 members, 3 members, for some reason in the legal world, an owner of an LLC is called a member. If you are a multi-member LLC, in other words, multi-members, multi-owners, I do want to let you know that by default, then you will actually change your taxes. And that makes some sense if you think about it, because if you are splitting income between multiple owners, well, that's a scenario, unlike a single owner, single member LLC, that's a scenario where the IRS doesn't actually know where to send the tax bill to. Do you all split the income 50-50? Do you split it 20-80, 90-10, right? The IRS doesn't know that information unless you tell them. And so for that reason, a multi-member LLC is different because it defaults to a partnership tax structure. However, it still remains a flexible entity, and it still means if you're a multi-member LLC and you form a multi-member LLC, you still have the options for any multi-owner tax entity. So you could be an LLC nonprofit, an LLC partnership, an LLC S Corp, C Corp, whatever you want, okay? All right, so that's myth number 1. Myth number 2, that you need to form an LLC in order to have your business be, quote, official, all right? Here's the thing. Your business, according to the IRS, starts the moment that you have a profit motive. What defines your business as a business and entitles you to take tax deductions for every ordinary and necessary expense of your business is having a profit motive. That's what distinguishes you from a hobby. And it is very important that you know this, because a lot of people miss out on the benefits they are entitled to because they think they don't get to do it until they form an LLC. Or some people think they don't get to be considered a business until they're profitable or until they have, quote, enough profit. Please, P.S., please, somebody tell me what enough means when it comes to profit. I think there is zero agreement about that across the face of this globe. And there are a lot of people, you may know some in your life or you may read about them in the news, who don't seem to have a good sense of enough. So I'm just coming to you from a world of, I think knowing what enough is actually a really great thing. That was a little side trip. Okay. So to be official to the IRS, you don't need an LLC. An LLC is something that it's very important that you form because you need the protection it provides, right? It's not a thing you just need to do because somebody said to do it, because your friend did it. And it's certainly not something you need to do because of your taxes, okay? All right, myth number 3, that an LLC is the only way to protect your business. This is not true. An additional tool that you can have to protect your business is business liability insurance. In fact, there's multiple kinds of business liability insurance. I am insured to the hilt for Sunlight Tax because I want to be, and because there are different threats that an accounting firm like myself might have. For example, I have cyber insurance, right? So because cybercrime is such a big, actually small accounting firms are a very large target of cyber crime. And so I have cyber insurance as well as, errors and omissions insurance, which is sort of a standard for accountants, right? So your field may have its own kind of norms, and that is something you should definitely talk to an independent insurance broker about, and I highly recommend that you do. But paying for business liability insurance gives you some of that same protection that an LLC might. Although it's not completely the same kind of protection, right? It's going to be whatever coverage you pay for. And insurance might pay for things like legal fees or, like a car. If your business car breaks down, it might give you a replacement vehicle. I mean, of course, your plan is going to vary quite a lot, and especially depending on your field, but it'll do a slightly different thing from an LLC. By the way, I didn't explain up front what an LLC does. An LLC's job is to separate your personal assets from your business assets, meaning that if somebody sues you because of something that your business does or you do in your business, the LLC creates a shield, a liability shield in between your personal assets and your business assets. So that lawsuit, rather than what happens if you're a sole proprietor, where if someone sues you for something you do in business, all of your personal assets are at stake as well as your business assets. If somebody sues you and you have an LLC, what it means is that lawsuit can come and it can get your business assets if you're found at fault, but it can't touch your personal assets. And most people's wealth is on the personal side, not in their business, right? So your home, your car, your kids' college fund, your 401k, your retirement savings. Those are personal assets and not business ones. And so that is the reason that people form a limited liability company in order to protect their personal wealth. All right. Okay. Last but not least, my final myth of the LLC is that it's a set it and forget it item. It's not. There is some maintenance required when you form an LLC. So something I want you to be aware of is that an LLC, in general, you want to pay a lawyer to do the formation, to create your articles of incorporation. They might be called something slightly different depending where you are, but you're generally going to pay a lawyer to do the setup and to do the filing at your Secretary of State for the state that you live in most often. But there is some maintenance, right? So to have an LLC, you actually need to keep it up to date every single year. LLCs have an annual requirement. Usually there's a fee that you pay once per year. In North Carolina, I can tell you that that fee is $200 per year. I do know that a lot of other states, it's more expensive than that. I've seen states that are $500, states that are $750, states that are $1,000. So it could be more. So there's an annual fee. Plus you have to update your information with the Secretary of State in the state that you're registered, just to, it's mostly pretty boilerplate, but you're just going to say, yes, this owner is still the owner. That address is still my address. This is the company address. This is my personal address. Things like that. So there are some little details. And I do want you to be aware, when you have an LLC, it's public information, all right? So you can go look up any LLC in your state. You can go to the Secretary of State's website. And I say this as an accountant because, accountants do this, right? So, for example, when I was running my tax practice, if I was aware that someone had an LLC, I could go, if I'm trying to dig up a couple more tax deductions for their business, I can go to the Secretary of State website of the state where they had formed that LLC, and I could see if their LLC is up to date. And if it is, then I know that the filing fee for that state is a deduction, right? So I can always check that. You should be aware that anyone can check to see if your LLC is in compliance and up to date, or if it's lapsed. And that's something you want to be sure you don't let lapse, right? So that's a thing for your calendar, and it's just an expense that you need to maintain. I will also tell you, when you have an LLC, because of that separation that you are paying money for between your business and your personal assets, your accounting is really important. Your accounting upholds that separation, and if it doesn't, you're putting your LLC at risk. Now, I'm not sure if lawyers are telling their clients this. I hope they are, and they probably are. But if you're going to pay to have a separation between your business and your personal accounts, you better actually maintain separate business and personal accounts. Because if you don't, what can happen is a court of law, if you're actually being sued, court of law can subpoena your records. They can see that you make personal expenditures on your business credit card, and they can do this thing called piercing the corporate veil, or piercing the liability veil. And that means they say, oh, she's not maintaining any separation between her business and her personal stuff. So there is no separation. So we're just going to go ahead and we're going to let this lawsuit go right on through and take all her retirement savings and her house. All right. So the accountant's perspective on an LLC is if you don't yet have a separate business bank account, the LLC, now it's always a good idea for every business. Even if you don't have an LLC, it's still a good idea to have a separate business bank account because it unlocks your bookkeeping. It makes everything cleaner. It gives you a record. It's wonderful. But once you have an LLC, it is mandatory, absolutely unskippable. Okay. So I hope that helped you understand or clarify some of those myths around LLCs. My biggest takeaway for you really is a lot of people out there, especially when you're starting a new business and you're a little overwhelmed with all the information that there is out there. It's so easy to just let other friends influence you. You're going to have a lot of friends who say things to you like, oh, you need an LLC. Oh, I save money with an LLC. Oh, I formed an S Corp. You'll save money with that. Whatever they're saying, just take it all with a grain of salt. You need to make business decisions that are based on your business. You don't know what's going on behind the scenes in anyone else's business. And it's really important not to jump into something with an annual requirement and fee like an LLC without being aware of what it actually does for you and what it does not do for you. All right. That is my final word on forming an LLC. All right. And with all of that said, I do want to tell you that my upcoming book, Taxes for Humans, has a chapter on LLCs and on business formation. It's super useful. It's like a total triage situation, and I'm super proud of it. So I hope if you want to get the book, now it's coming out in late November in time for the holidays. But if you're interested, definitely hope that you'll pre-order that. I also want to just mention, when it comes to the book, you can pre-order sunlighttax.com/book. I also want to mention that I am currently, if you're listening to this podcast, if you really like what I do, if you've benefited from the Sunlight podcast and you want to be part of the hype squad for my book, I would love to hear from you. I am looking for some people who love that introverted work of getting into spreadsheets, making spreadsheets of independent bookstores and local public libraries and academic libraries. If that is your thing, if you are a freak in the sheets and you want to do that introverted work, or if you want to host a book club, if you're a library lover, if you're like a mega user of your libraries, making requests for my book at your local public library is a huge help. And I am looking to track who is doing those requests and seeing if we can get coverage across multiple libraries. So if any of these things have any appeal to you, also if you're in the academic world and you're interested in putting the book on your syllabus, it is geared towards younger, earlier stage people, and it's very appropriate in a university setting. Or if you're a coach and you teach business principles, but you have kind of a hole in the tax section, this is a really great book for a coaching program. So there's definitely going to be some bulk buying options, lots of stuff in the plans, but I'm just really interested in knowing who's out there who's interested in helping me do a little bit of the promotion work for it. And definitely I will pay you back in books and swag and workshops and undying gratitude. So if you're interested in any of that, just shoot me an email, hello@sunlighttax.com, and tell me what you're interested in and why. I'm so thrilled to hear from you. Thank you so much for that. All right, to everybody, I hope this LLC episode has been useful for you and valuable. If you found it useful or you have a friend who's thinking about forming an LLC, share the episode with them. I hope it will help them too. And I will see you next week on the podcast. Bye. Thank you for watching. If you like this video, be sure to like, leave a comment, and subscribe to my channel. I'm so grateful for that. This video is for education and entertainment only. Nothing in this episode should be taken as individual tax or financial advice. You can find all the tools, books, and links I reference at sunlighttax.com/podcast.